What's up, everybody? Welcome back to Be the Trader. Thanks for tuning in. If you're watching on YouTube, be sure to comment below, subscribe. I really appreciate that. And hitting the bell allows you to be informed every time I update a new video, which happens very often. The other thing is, if you're listening on podcast, please give me a rating and review. It's a good way to say thank you, and I really appreciate it because it goes a long way. Now, this is the second week of January, and it's been going really well. I've been sticking to my plan, been trading very selectively, and that is something I'm proud about. You know, I traveled Monday through Wednesday for work in Colorado, and only traded one day through those 3 days because there was an opportunity, but also because I had some time available. And the experience of working full-time and trading is making me even more selective in what I trade because I don't need the extra stress. And I like that, and that's something that I've been enjoying. With that being said, I wanted to talk today about volume and why it's so important. And we're going to be concentrating on one specific setup, and it's a breakout trade. And the reason I want to talk about that is most people know what that is, and then also we can use the simple breakout trade to evaluate volume and the importance of it. And so what I want to say is, let's say we have a stock that on the daily chart setting up, it's topped out multiple days, maybe even months, weeks, at $1 or let's say $2 breakout. And on this day you see it, and it's at $1.80 and it's creeping up to $2. So you're prepared to buy it. Now the old me would probably make the mistake and buy it before it breaks out, and then you know how that pans out. It usually ends up being a loss. And then there's a part of me who waits for right when the breakout and then buys it, and usually ends up being a loss. Or you might have mixed results, like why sometimes I do this and I'm right, sometimes I do this and I'm wrong. I really don't know the difference. And you only have one part of the play. It's the setup. The easy part is, it's setting up to break $2. It's easy to see that, which is great. Trading should be easy, but you also need a confirmation. And that confirmation for me is not only that is it breaking out, but is there volume? And volume is a huge indicator. Volume will show you, kind of give you that extra confirmation, that extra confidence, or it'll tell you that, man, you probably shouldn't be in this. So let's say, for instance, number one, it breaks out at $2 and we have no change in volume. It just breaks $2. And because of that, it probably only goes to like 204, 205, 206, and then comes back down to 2. Now you could say to yourself, I'm going to buy this because it broke 2. And it's okay if you do that, but the volume's indicating that no one's interested. Meaning there's a low probability that this is going to continue its run. It's going to run up. Now, it came back to $2 and held for a little bit, but if it only held for like 5 minutes, it's not a good indicator, especially if there's no volume. And so I would prefer to wait for it to bring in volume. The old me probably would have just got in, and more times than not, it would break down. Now, there's the other option. Let's say it breaks out, and we have huge volume, which is good because it's a sign that there's a lot of people who are interested in this opportunity. But let's say that it only goes from 2 to 210, and then immediately comes back down, and maybe even goes down under 2. That's a whole different signal. Now it's telling me that, you know what, maybe that's just a lot of sellers up there, and a lot of people took that opportunity to get out at a good price. And there's a lot of shorts maybe, or whatever it may be, and it's not going to break out, and it's going to continue downwards. It's like a fake out breakout. And then you have the instances where, let's say it breaks out with huge volume, right? And it goes to like 240, 250, and you're like, oh shit, I missed it. And it happens. But it's better to miss it than to chase, because if you chase up to like 240, 230, it's going to come back down more times than not. It's going to come back down to $2 and test. It may go over under, but because it had huge volume and it spiked through 2 with such strength, and it comes back down with lower volume, which is super important, because if it comes back down with big volume, it just shows there's huge sellers too. But if it comes back down with smaller volume, then that breakout then I'm going to be dip buying that, because now we have an indicator that there's a lot of interest in this play. We come back down to 2, and there should be a higher probability that we go back to the highs, which is something that stands out from the previous 2 examples. Now, if it breaks out, let's say at $2, right, and it has mediocre volume, but then it holds above 2, goes under 2 for a little bit, but over time, let's say 30 minutes, it's holding over under $2 and then picks up volume, you're going to want to get in. So hopefully these examples, you can picture this. Now let me explain why the volume is key. If you didn't pick it up from these examples, number 1, volume is your extra confirmation. When there's a lot of volume, that means there's a lot of interest, which means if you're a momentum trader, there's a lot of opportunity on the upside that it's going to continue its run. Same thing though, if there's a lot of volume and it doesn't move, that means it's not going to go anywhere. And then if there's a lot of volume and it does move, but there's equal to amount of the same volume or more, which would be worse, pulling back a major knee-jerk reaction coming back down, it could be a bad sign that this stock is not going to continue. It's actually going to just crap out, which I'm sure a lot of us have experienced, where we buy something because it's huge volume and then it craps out harder. So the key is it's almost more important, and this is something that I've been working on that I've gotten a lot better at on longs, is waiting for that dip, because you give it an opportunity to tell you, A, is there volume, right? B, if there is, how much volume is coming back down, because if it's significantly more, then I might avoid this. But if it's less volume, that means there's not as much interest selling pressure, which means it should consolidate, coming back to, let's say, previous resistance, which should act as support. It's okay if it doesn't act as solid support. It could be like a trampoline where it hovers up, plus or minus 5 cents, and that's okay. But if the volume is less than the breakout volume, that's good, because then if it starts to pick up volume, you could jump in then with confirmation. And that's where volume is so important. Volume is important because it gives you that extra confidence. If you just buy with just ignoring volume and just looking at the chart, then you're going to have a lot of stress. And that was me. I was always buying something just because a chart told me to buy and not because the volume told me to buy. You need both to kind of confirm. So I'm hoping this kind of gives you a good idea of what I mean by why volume is so important. Another idea is it's the crowd mentality, right? Like if there's a lot of people trying to jump in on the stock, that's a great sign that a lot of people want to buy this opportunity and they believe it's going to go up. And if there's not that many people getting out, then that means there's a lot more people willing to hold this opportunity. And that means as long as we get more volume, more people coming in, it's a good opportunity to jump in, because then you're going to be part of that next wave. The first wave is very questionable. You might make money, but you better try to just scalp it, because it is a high opportunity that it could go up or down. You really don't know what's going to happen until you get confirmation. And volume is that confirmation. The volume at the beginning and what it does after is so important. So pay attention to your volume. There's books out there on volume analysis that are really good, that I highly recommend you at least just Google, just read up on volume. But take a moment and look at all the trades that you've been successful on and look at the volume. And then go look at the ones you've lost on and then look at the volume and see what start to decipher when you look at that. And I promise you'll start to see some indication that maybe I should wait for volume. Now, all I can say is based off what I've seen, what I've experienced. Obviously, you want to do based off your experience and what you've seen, what works for you. But I can tell you that when I started paying attention to volume, I'm starting to see a huge difference in how I treat my trading, especially when it comes to cutting losses, entering trades, and adjusting my stops. So that's something that is important, because another indicator just to leave with you to think about, if a stock is skyrocketing with huge volume, but let's say it hits a wall from 2 to 250, and comes, pulls back to 240 and then skyrockets again, passes 250 to 280. And then we have a pullback from 280 to 250 and then skyrockets to 3. And then we go from 3 to 250 just on a pullback. Which of those is going to be the real resistance? Well, in this example, there's people who are probably shorting from 2 to 240, as I mentioned in the beginning, or 250, shorting that thinking it's a pullback from 2 to 240, risking 10 cents. But that's not really a pullback, because is that really a resistance? If the volume's strong and is pushing through, we're just taking a moment to breathe. If the volume pulling back isn't that much and we're only going to 240, it's really not a true resistance. A true resistance is stopping that motion. And stopping that motion is when it hits a 3 and pulled back to 250. That's a big pullback compared to 250 to 240, 280 to 250, and now you have 3 to 250, even 240 would be even better, because then you can short those bounces with confidence, because you've shown, or the chart's shown, hopefully, that there's been big volume pulling back as well, and you have the chart confirming that it's a pretty big pullback in reference to the push. And so that's important. So volume helps you out in so many ways if you're trading. It's helping me out a ton, especially if you're trying to dip buy something. And it's exact same. It's like same from the short side, but just reverse. So I want to leave you guys with that. I'm hoping this helps you. Hope you have a good week of trading. Next week, stick to your plans, stick to your consistency, and remember, study volume, because it is vital, especially to add to your trading if you're not already. Thanks again, guys. And if you're watching on YouTube, please subscribe. Please give us a thumbs up. And if you're listening on iTunes or any podcast platform, give me a rating and review, because it helps me a ton and it goes a long way and keeping me motivated. I mean, I'm not going to lie, it feels good when someone gives a show a rating and review, because I put a lot of work into this and I appreciate it a lot. You guys take care. Have a wonderful day.